Hey guys, welcome back to my financial focus. In today's video, I'm going to be talking about Twitter stock and the recent news that came out surrounding Twitter stock, specifically regarding how Elon Musk recently bought a large amount of Twitter stock and has now become the largest shareholder of Twitter. And we can see the way that the market has reacted to the news. The stock is up about 30% in 1 week, increasing from about $39 per share to $51 per share, which put an extra $10 billion on the now $40 billion market capitalization for Twitter's company. So I'm just going to talk a little bit about the recent news and then do an intrinsic value analysis of Twitter to figure out what a good buying price could be from a value investing perspective. So thanks in advance for leaving a like, and let's get right into it. So we can see right here, this article talks about how the shares a couple days ago closed up 27%. Elon Musk bought about 73.4 million shares of Twitter, and that stake is worth about $3 billion, which basically means that since Elon Musk has bought into Twitter at around like $30 to $40 per share since then, if he really did own these shares before the recent increase in the share price this week, which he obviously did, then that means that he's already up about $600 million on his initial $3 billion investment, which is pretty crazy. And we can see in this next article right here, they talk about the top 5 Twitter shareholders. And we can see that Elon Musk is number 1 with his now 9.2% stake in the company. The Vanguard Group is number 2 with 8.8%. Morgan Stanley is number 3 with 8.4%. BlackRock is number 4 with 6.5% stake in Twitter. And then State Street Corporation is number 5 with 4.5% stake in the company. So Elon Musk is beating out literally all of the shareholders, including the founder of Twitter, Jack Dorsey, who actually only owns about 2% of Twitter's total outstanding shares. And we can see right here that this article talks about how Elon Musk actually started buying up shares in Twitter as early as January 31st. And if I scroll down a little bit here, we can see where they talk about how he, on January 31st, purchased a little more than 620,000 shares. And over the course of that time till now, he's been buying shares in ranges from about 370,000 shares on February 15th to 4.8 million shares on February 7th. So he's been buying up a lot of shares, and that, of course, totaled to his now 73.4 million shares of Twitter. And then right here, we can see a couple of the companies that Elon Musk owns, their market capitalization, and how much he actually owns of them. He sits on the board of directors of these companies, and we can see there's, of course, Tesla, 1.2 trillion, Twitter, 40 billion, SpaceX, $74 billion market cap, Endeavor Group, 13 billion, The Boring Company, 920 million, and Neuralink, $360 million of market capitalization. And he owns about 17% of Tesla and then 9% of Twitter. And then of The Boring Company, he owns about 80%. They're not too sure about Neuralink. And then of SpaceX, he owns about 47%. So he owns a lot of equity in these extremely valuable companies. And it's kind of interesting to see that he started off with these space exploration and electric vehicle, clean energy, renewable energy technology companies. And now he's sort of expanding, I guess, his like technology or so-and-so empire into social media, which is pretty interesting to see. And that actually came recently after he had announced that he might have potentially been interested in starting his own social media company, and he was also criticizing some of the censorship practices that were happening in Twitter recently. And so that might have contributed to him buying up shares in Twitter, or it might have been something that he's been thinking about for a really long time. And then right here, I just wanted to point out something interesting, which is that obviously Elon Musk owning 9.2% of Twitter, that makes him the largest shareholder, but that still doesn't make him a principal shareholder, which is when somebody owns at least 10% of a company. And that could be to Elon Musk's advantage because, as you can see right here, when somebody is a principal shareholder of a company like Twitter, for example, they're forced to actually do these specific reports with the SEC whenever they're thinking of buying or selling more shares in a company. We can see that they have to file reports with the SEC within 2 business days of activity. But since Elon Musk only owns about 9.2 or 9% of Twitter, he doesn't actually have to do that. And so that definitely puts him in a bit of a strategic position because he can maintain a bit less transparency in terms of his stock trades and stock movements in regards to Twitter. And right now, I just want to go into Twitter's financials so we could get a better understanding of the financial health of the business, because moving forward into the future, if Elon Musk is on the board of directors and he's having a say in the future management decisions of the company, then we might see a lot of differences happening in terms of Twitter's financing structure or some of the innovations coming out of the social media app that could potentially make them a lot more competitive to some of the more dominant social media apps right now, like Facebook and Instagram, or other social media apps owned by companies like Microsoft, Apple, and so on. And so we see right here that for Twitter in 2021, their total revenues came out to be about $5 billion. And about 4.5 billion, or close to 90% of that, came from advertising services. And we can see that their income, or in this case, a loss from operations for 2021, was $490 million. But we can see that a lot of that actually came from this one-time litigation settlement, which came out to be about $765 million in 2021. So if they didn't have to pay this litigation settlement in 2021, their income from operations would have actually been profitable. And then on top of that, we can see they took into consideration some of the interest income as well as some of the unrealized gains that they had from investments from the other income section right here. And if they were to add those on top of the profitability they would have had without the one-time litigation settlement, that means that they could have potentially ended up with a profitable net income for 2021, which would have been really big for Twitter. And so I wouldn't be surprised to see if when they report their annual earnings in 2022 that they don't announce a profitable year, which would of course end up being another catalyst that might send the stock price soaring even more so. And obviously at the moment, because their net income is negative, we aren't actually able to calculate a PE ratio right here, a price to earnings ratio, because they have negative earnings. So there's no way to really figure out how the company is priced relative to their earnings if they're losing money each year. But once the company is actually profitable, then that might act as a catalyst that could boost the share price even further. And then next, I want to look at page 63 here, and that'll show us Twitter's balance sheet. And we can see that they have quite a bit of cash and cash equivalents on their balance sheet. Total assets come out to be about $14 billion, up from $13 billion in the year ending 2020. Their total liabilities are about $6.7 billion in 2021, and so that puts their total stockholders' equity at $7.3 billion, which means most of their business is financed by equity as opposed to debt, which makes sense because the founder of the company, Jack Dorsey, only owns 2% of Twitter, so that means that he must have given up a lot of equity in order to get Twitter off of the ground. And lastly, I want to look at their statement of cash flows, and also just to touch on a little bit on their income statement. We can see that their total revenue was $5.8 billion in 2021, which is an increase of about 37% from 2020. And then, as we saw before, their advertising revenue was about $4.51 billion, which was an increase of about 40% from 2020. Their U.S. revenue totals about $2.84 billion, which is an increase of about 36% from 2020. International revenue was up about 37%. And their loss from operations, as I touched on, came primarily from that litigation-related charge, as we can see right here. So if it weren't for that, their company might have actually ended up with a profitable fiscal year. And lastly, I wanted to look at their cash flow statement, which I'm going to do a discounted cash flow analysis right after this, and it's a little complicated this time around because, as we can see from their cash flow statement right here, although they had $630 million of net cash provided by operating activities, their purchases of property and equipment came out to be about $1 billion, which means that their free cash flow for 2021 was actually negative. And so after this, when I show the discounted cash flow analysis, we'll see that I ended up using the free cash flow from 2020 as opposed to 2021 just because I'm not really able to do a discounted cash flow analysis with a negative free cash flow metric. So I used the free cash flow metric from 2020 because that one was actually positive. So that might alter the intrinsic value result a little bit, but it is still using a relatively recent metric. And then we can also see that net cash used in investing activities came out to be $52 million. Actually, they collected $52 million, and that came primarily from proceeds from marketable securities. And then we can see that they used about $470 million in financing activities, which primarily came from repayment of convertible notes and repurchases of common stock as a part of their recently announced share buyback program that went right into effect as soon as they announced it in 2021. And so after that, we can see that the net change in cash from 2020 to 2021 was about $200 million, from $2 billion up to $2.2 billion of cash and cash equivalents at the end of 2021. And lastly, to end off the video, I'm going to show off the discounted cash flow analysis that I did for Twitter. And we can see that based on these metrics that I pulled from Yahoo Finance is basically estimating that the growth rate for the next 5 years is going to be about 80%, which is pretty substantial. And so just to be conservative, I ended up cutting that value in half for the growth rate for years 6 through 10 to 40%. And then I used the 2020 year one free cash flow, which came out to be about $270 million. And then the net cash minus the net debt that's currently on their balance sheet put them at about $840 million. And then they have about 800 and so shares outstanding in their company. And so after that, we can see that the intrinsic value per share came out to be about $104 per share, with a 30% margin of safety of $73 per share and a 50% margin of safety of $52 per share, which compared to their current share price would mean that Twitter is currently, according to those estimates from Yahoo Finance, trading at about a 50% margin of safety relative to their intrinsic value. But if we look at it from another perspective, we can also see that their free cash flow was about $270 million, and their current market capitalization is $40 billion. So based on that, although we might not be able to have a price to earnings ratio, we can see how the business is currently trading relative to their free cash flow. And so I did the calculation here. We can see 40 billion divided by $270 million of free cash flow. That means that the business, or the stock in this case, is currently trading about 150 times free cash flow, which is pretty large. I mean, if we look at different investments in other companies, they're sometimes trading at about like 50 times free cash flow. That could honestly be considered pretty big as well. But 150 times free cash flow is also pretty substantial and pretty large. But I would definitely love to know what everyone watching this video thinks. Is Twitter a buy, a sell? Is it overbought right now, or is it undervalued? And let me know in the comment section down below what anyone thinks about Elon Musk's recent move to buy up 9% of Twitter. Maybe he just wanted to be able to say that he was the largest shareholder of Twitter. I'm not too sure. Definitely let me know. I would love to talk about it. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.